Alright, well, welcome to the stream. I think we're going now. Might take a second to hit YouTube. Looking a little glitchy. It could be just the camera FPS. But, hey, who cares, right? We're gonna work it. We're gonna work on it here. Let me adjust this screen. Oh yeah, I had readjusted how my screens work, so I'll bring this one up here. You can see what's going on. The desktop there. Let's adjust this one as well, it looks like. It's this one. 1 second, Control S. That's how you put it. We'll run like that for now. Full screen that. Alright guys, well, welcome to the stream, whoever shows up. I appreciate you. Subscribe, like the video. You don't have to like it yet, you can see if you like it if you want. And let's do this, fix this right quick. Alright, you can also use the TTS. I would recommend that because I'm not always looking at the viewer count, and so I don't know if anybody's in chat. You can use the TTS command if you're with me live right now. That'd be kind of cool. Test it out together. Just give me a second as I update the screen here so that things are working correctly. You kind of see what's happening. Caught on something here. Looks like I have my headphones in. Might be outputting the sound of the headphones here. Let me check, which is good. That way we don't get that echo. No, we're going straight to the TV. That's fine. Run with that for now. And I might take a break in a little bit, so I'll probably pull up like a video that you guys can watch while I'm doing that. Ooh, a lot of blue came across the screen there. Look up natural gas here. When I look up natural gas, I always go like recently uploaded 2 hours ago. People are on this now. All of a sudden, people are wanting to make videos 1 day ago. 16 hours ago. I've been watching this guy, Arcus FX, which he was like on bullish, and that screwed me up because he's playing on Forex and I'm playing on Nasdaq, which we only got futures of this stuff that's on decay, and that's the reason why a lot of your futures trades turn out to go bunk a long ways, because they're always going short on the futures. It's always going short. So there's different ways to play that and all this, and we'll get into that in this video as we progress along. This video is going to be quite a bit long, this live stream. I plan on doing probably I'll reset the stream at some point if I want to go work on the TTS system or on LowDev. Let's plug LowDev real quick, huh? Plug LowDev with me. Alright, so if you roll over to lo3.dev, you'll see my website comes up. This is our quantum trading bots, basically the main hub of the website, webpage right here, where you can get to the TTS program and use that on your channel if you want. It's in testing though, so I have to add you as a tester. If you want that, feel free to email me and or you can like message me on chat or something, and I'll unlock it for you. That'd be kind of cool if other people are using it. So, as I said, this website is currently, it's semi-operating right now. I did switch servers, so I do have to reprogram LoadEv a little bit, so the bots aren't really working for trading yet, or for the moment, because I shut down the other server because it was just, we needed to move over to this server for CPU reasons and the processing the AI stuff, right? So, second, I'm having my dinner sandwiches here. Breadless. I do eat bread, and I'm not on a gluten-free diet. What is this, Malwarebytes ad? Get out of here, bro. So, you can sign up if you want, whatever. But I'll be getting the robots back running pretty shortly. Those are just share robots that are under that, and my options sales robots on Android. So we'll get that back running since obviously we got priced out of Boil after the reverse split. And I'll get my donation stuff going up real soon here. If you guys like the content, you can show me monetarily or whatever. Since everybody else is grifting like DSP and Wings and everybody, might as well too, right? So you can go in here, whatever, blah, 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 blah. I plugged that. We can move on to the next thing. If you click TTS or whatever, this is the TTS program that I'm running above here. TTS command program that I made. Green screen onto OBS. So, like I said, if you want to check this out, I'm currently working on the donation side so that you can get paid through your this TTS system by donations, and it goes all onto the screen and everything. It also works with YouTube's super chat system and this, which you'll have a dynamic web page like lo3.dev / your channel name, and then it'll go to the donation page while you're streaming, and then you can get donations while streaming, paid out by PayPal. So it's not too bad. It's kind of a little clone of LiveBeam. I should check the stream and see who's in here. See if we even have any viewers. I was watching Local live, and then I kind of got so. Cody first attacks his mom based. We could probably pull up Canadian base, man. He'd probably let me restream something if we wanted to update to that. Local business. I'm going to try not to play Cyrax stuff tonight, but I think if you run a TTS command, it might play the Cyrax message. Guess we're live. Pull that up. Audio should be good. 0 viewers. But I got the chat up over there so I can see if something happens. Alright. Let's get into the actual meat of the video, right? We're going to be listening to a combination of, I got a black shirt on and it seems to be like wanting to put the, oh, I gotta turn on my studio light. That's why. There we go. I should brighten the colors up and the contrast. my studio light. Be a long live stream, so relax and you can get to understand this natural gas market better, and you're gonna know how to actually properly play this thing because they don't call it the Widowmaker for no reason. It'll take all your money, man. It'll take all your money. You'll have dreams of grandeur. It would just suck your money dry. See, that's why he calls it the Widowmaker right there. Posted that 16 hours ago. These guys know. These guys kind of know what's going on. They do know more than me, and that's the thing about watching these guys is like they'll be saying they're bullish and stuff, and like literally, dude, whatever they're saying is weeks upon weeks out. And so you get bullish, and you're like, what happened, dude? These guys are talking about like 2 months from now. It's not just going to be bullish tomorrow. Like especially on something that on an ETF or ETP that is got a mad amount of decay, like insane amounts of decay. And if it's rigged like that, that's okay. It's rigged. Got mad amounts of decay, and so what if it is rigged? It's got mad amounts of decay over here. There's only one conclusion on what you should have been doing, and that's going short on an ETF, a futures ETF or ETP. Is extra amount of decay. So you're running a leveraged ETF short with a short decay on it. That makes sense? But even if NG1, for instance, is hanging around flat, is running like in a range up here, like we'll see in a minute. Even if NG1 is running in that range, the futures is going to decay down, 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 while natural gas stays flat. And so you're like, well, why am I losing? Because the futures contracts, the futures ETFs are decaying on NG1. Dude, I didn't figure any of this stuff out until the very last minute, man. I mean, nobody told you this. Nobody told me this stuff, and they won't. It's all rigged against you, and I can capitalize on this and take all the money out of your pocket. The fact that you don't know this information, and so ultimately, that's where we're left with how do we keep losing positions in natural gas? Um, and a lot of it is because you're some people's mindsets in their brain and how it works. They're kind of like maybe they're nicer type of person on the regular, they don't lash out too much. That type of mentality bleeds into their trading, and they go long on something, and they're like, they're going long on it because they feel good for it, and they're trying to be a good person and go long on the thing, and that for some reason that locks you in to this mindset of where you don't pull out. Okay? So it's like pretty messed up. I've been watching this ETF guy here. He posted this like 3 hours ago. We can run through it. It's a little bit of AI. Looks like it's only a few minutes long. Um, I'll let you listen to this one, and then I think we'll talk. Maybe we'll talk some more after. But the general consensus of the Widowmaker, if you seeing the Widowmaker on something, dude, I mean, it's self-explanatory, to be honest. What is it going to do? It's going to take all your damn money. So what is you should have been doing is you should have known that it was going to take all your money, and you should have been shorting it and not been long. You could be rich. You can be rich. It's that simple. Listen, I know you want to say, shut the fuck up. You don't know what you're talking about. Because everybody does that to all of us, right? But once I get through this video, you're gonna see why and how that we could be rich. It's super simple. As long as somebody would freaking punch your ass out or something when it was time for you to be making the right decision. So you can sit and blame it that it's rigged, that it's not rigged, this and that. Trust me, bro. It is rigged and it's not rigged. And we're going to go through all of that if you got time. You don't have to watch right now. You can come back to the video later or whatever. I don't really care, but we'll take a couple minutes. We'll watch this guy here.
Better future.
Which he's got to do his stupid stuff. Who knows, man? This guy might copyright strike you. Jerks. Alright, you dumb ass.
Already from December.
Turn this down. So, this guy talks in that stupid AI voice because I guess he's like too shy or whatever, right? November 8th, natural gas analysis, and you uploaded this 3 hours ago? Oh, we are on the 8th, aren't we? Yeah, I did my video earlier. Put it on this 8th, so in natural gas, there's a lot of factors. And one of the things that you should be aware of is a storage report that happens every Thursday. Every single Thursday, they report on the stupid numbers. And it's always, and the tanks are always full, man. So what happens every Thursday? Goes down. Every Thursday, man, goes down. You need to know this. This is one of the key points that you should know, is that every Thursday, the stupid storage report comes down, and Thursdays are going to go down. So just be prepared. Is it going to go down a lot, or do this or that? Now, futures, that's where it comes into play. You say, well, why does the futures keep going down every Thursday? The storage report. So the futures go down even though NG1 kind of stays flat. Because the NG1 is the actual spot price on the contracts, and then you have all these different futures that are behind NG1 that have decay attached to them. So watch this video, let that sink in.
Natural gas futures moved lower on Friday as Hurricane Rafael's threat to U.S. production diminished and markets weighed the potential U.S. policy impacts under President-elect Donald Trump. Hurricane Rafael, which had temporarily disrupted U.S. crude output, is expected to gradually shift westward across the Gulf of Mexico, easing concerns over its impact on oil-producing regions. Energy companies had already cut production in the Gulf by about 10%. With unseasonably warm temperatures sweeping most of the U.S., natural gas demand has declined as furnaces remain idle. Weather analysts forecast that these warmer-than-normal temperatures will continue for several days, further dampening heating needs. Still, isolated cooling systems across the central and western regions could provide localized demand support. On Thursday, the U.S. Energy Information Administration reported a weekly storage increase of 69 billion cubic feet, surpassing market expectations of a 65 BCF build. This larger-than-expected injection brings total working gas in storage to 3,932 billion as of November 1st, positioning current stocks 215 billion above the 5-year average. The increase, combined with stronger-than-average wind energy output last week, adds to the already robust inventory levels, signaling ample supply ahead of the winter season. Meanwhile, the first signs of increasing demand are on the horizon. With colder weather anticipated by late November, the storage surplus is expected to begin declining from November 19th, about a week later than the 5-year average. Currently, as shown on the price chart, natural gas is holding at the $2.65 support level, awaiting further clarity from December weather forecasts. Any delays in the onset of freezing temperatures could push prices below the $2.65 threshold. Otherwise, gas prices are likely to rebound toward the $2.80 resistance, and if cold weather stabilizes, a sustained breakout above this level could target the $3 resistance. From a daily technical perspective, traders are concentrating on defining a support range between $2.60 and $2.80 levels. The market is approaching a key technical level at $2.80. A breakout here could indicate a continuation of the short covering rally that began Monday after prices hit a low of $2.514. Should a breakout above this level hold, it could pave the way for testing resistance in the $2.90 to $3 range. Until then, I expect prices to consolidate within the $2.60 to $2.70 range. Please like, subscribe, and comment to support the channel. See you in the next one.
Natural gas rises slightly.
That's good. I did watch the video with you guys. So, excuse me. I know what's going on. And if you're liking the video so far, you can hit a 1 in the chat or something, so I know that I'm doing all right. So let's take this, what he just said, back to our NG1 chart here on TradingView. And on my charts here, I have I'm still running free. I don't pay for this, nothing, which I probably should, because then I could have actual stuff popping better than just my lines, relying on my lines. Sometimes my lines are gone. And if you're exclusively looking at one natural gas chart, you're going to get took. You have to look at every single natural gas chart, otherwise it's going to take your money. Boom, like that. It's going to be gone. It'll lock you up, and there will take it. So let's get back to what the video said about the delay of colder weather, the onset of colder weather into the end of November and into December, which is kind of aligning with my whole theory of how the sun is overactive, right? The sun is overactive with all these CMEs. We should have forecasted months when they were saying, "Oh, we're having the max CME right now." We should have said, "Dude, the sun is raging. I mean, we should be short on the natural gas market since 2 years ago, and we would have been millionaires by now." That's the thing, dude. Come on. So what the guy said is that he expected that there was a delay onset of weather. So right here where my mouse is a red box, and this represents the delay and the onset of the weather. Okay. Now, some things that you need to pay attention to is that inside this red box, I put 2 indicators that says that there's the contract rollover is on November 26th, and then the next one after that is, here, it's around Friday the 27th of December. I can hit this little button here. On NG1, it has all these flags on NG1 here to tell you when the contract is going to roll over. And so you need to understand what happens during the rollover, okay? And we're going to get to that in 2 seconds. I'm just going to tell you the dates right now. So we got the 26th of November here, and then we have the 27th of December. So right around the same days, the 26th or the 27th, over the next 2 months. And now let me explain to you what happens during a rollover event. So when we sat there and we were rolling over our contracts, what happened is because the contract has gone out of the money, it basically lost all the money, and they wanted you to pay basically another 100%. It's not always 100%. To roll over, you basically would pay the difference and add to the position, and then it will take a rollover and sell it off. But what ends up happening is you have to spend more money. Your original amount of money wasn't there, you're losing, and now you're having to put more money in. And so that's kind of what these guys are having to do on this decay ETFs. And that's the decay of what I'm talking about. How in order for them to roll over this contract here, they have to take the money out of the futures markets to roll over this contract. And so what you end up seeing is that you always lose every month every 30 days, you always lose. And you're going to say right now, you're going to say that's a dang fact. That every 30 days, I always lose my money. So what does that say to you? Well, I should be shorting the thing. That's how it's designed. The tool is designed to be used to make money. Literally. To give you free money. So, if you do it right. Okay, so if we clarify that we have 2 rollovers coming before our expected end of this wedge. And the delay of the onset of the weather, Trump actually getting inaugurated as the 47th president again, and then the nat gas rises. So when does that happen or whatever? January 1st, basically, or something like that. But we're already looking at basically January for this thing to pop off. And if you look at right here, is right around where my target is the end of January, which is where the storage bins will be empty. For the most part, would be more empty than what they was during the beginning of the winter. So that's when you're going to get a storage report out that says, oh, the tanks are empty, we need to refill it. Bull market, boom. And then so you're in this big long uptrend here, which is the major one of what we've been waiting for the longest time, and we've lost our money. And how you lost your money all the time is because this is NG1's chart, and it's traveling sideways, and the futures are having to take the hit for the rollovers. That's why the futures are decaying every 30 days, and that's why you need to be in puts always, 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 always. I mean, dude, don't sell it. Once you buy one of these puts on the futures, don't ever sell it. If it's going in the other direction, buy a call and to offset it. But be aware that on the certain day that the decay happens, it's going to trap everybody who is long on that futures. Okay? So every 30 days, it's going to trap you. Unless we're in this major, major, major uptrend stuff where the decay ends up actually sometimes moving in the opposite direction in a bear market type scenario. So this, you have to imagine that if you're playing the futures, that when this is going up, that's the bull market. When this is flat, that's bear market. It's not going down, but it's bear market of the future. Okay, so if we're playing futures, we need to be buying strictly before the top of before this thing goes up. Okay, and so I have this multi-time frame MACD SMA strategy loaded up here with the 21 EMA, 42, 90, 200 EMAs. Okay, so and then like a 30-day on the MACD. Down here it's like running a 30-day average. That's how I have those set up. But you can find that. You can find this strategy that I'm showing up here in the free ones. If you look in TradingView, you can get them. You can pull it out of there by searching for it. I have to search by name or something. All right, so what we're looking for is the major bull market of the natural gas indices, noting that, okay, we're going to be in the whole strategy now, knowing about the decaying every 30 days. I mean, and not only that, the bear storage report every Thursday is going to push us on a futures contract continuously down in the bearish direction because of that. So we need to be playing short on Boil or UNG or XNG. XNG is like all 1x of NG1, and UNG is a futures of NG1. Okay, so you need to know that the stocks that they give us in that, if you're not on Forex and you're on some other market that doesn't have NG1, you've basically been baited. And I'm sorry to say that if it's like if you're having a hard time. But the truth of the matter is on Robinhood, on a few of these other Nasdaq trading platforms, you're being baited with these ETFs. Okay, we got the hard Hit her out of the way. Okay. Now, what we need to look at is there is a different side to K because it's not just going to pay us all the time. It would just go straight down. If it was just going to pay us all the time, it would just go straight down. And so they have to fool people. And so these spikes here are the ones that you're seeing of where there's the bullish fake out, right? And so we need to only be interested in shorting the market. And I know that's counterintuitive, and I know you don't want to hear that. You don't want to accept the fact that everything goes down because you want your numbers to go up, so you want things to go up. Well, in needing to do that, we need to take from other people. So what ends up happening here in the long term, and we're looking at like the weekly. I'm zoomed out on the computer. It doesn't show like this on your phone. That's why it's good to sometimes not just rely on the phone. That's another baiting mechanism, is to just rely on the phone graph. That doesn't show you everything. And you could, oh my gosh, I mean, I couldn't imagine somebody was following one of these Robinhood charts. Are all wrong. The charts on Robinhood are just, do not represent anything to do with what's going on, I swear. You can't do that, no. If you can, man, if you figured it out somehow, then good for you. But let's just point out this big, huge head and shoulders, which took like years to produce, right? So we're looking at years here. But what you're saying is that, okay, when you have these red stretches here, like this red arc here to this minor pump, and this red arc here to this minor pump, which is like, there's two of them here. And so what I say is like, something that you're going to want to do is take this measured movement here. If I bring out a trend line real quick, and I go from like top to top, what the heck, man? Top to top here. Significant tops to tops, and you can see that it's there, it's there, it's there, it's there, it's there. See, it's everywhere. So we know that this measure move is like a key indicator of where and when the top is going to form. And I just pulled this out for you, and so I'm going to show you and how you need to see, like, if you're listening to somebody on YouTube and they're long, you need to be in the market. No, you don't. You do not need to be in the market, okay? Actually, you don't want to be. If someone's telling you something like that, no thanks, man. All right, so what's happening here, I gotta zoom out a little bit. Okay, we need this indicator here. So we got a bottom here, but top to top. So top to top, roughly there. Top to top, a little bit shorter action there, a little bit longer action there. And so that's why you're seeing, oh, there was a top. See, there's top. Let's just do this again. That's why it topped, because it was right around in this area, right? So if we top to top, it's close enough that we should say we're probably top, right? So let's put this in here, and you can see that the top is going to happen roughly in here, in this zone. So I'm saying, like, it was getting shorter from this over here, it was getting shorter. So we might need to be relying on something a little bit shorter. So maybe like that. So we put the top in here. And I'm not saying that we're going to go higher than the previous top. But NG1, the decay direction of NG1 here, if you zoom in, you'll see, sometimes you'll see gaps in like, I'm going to point this out right here, that right here there was a gap of where they did a reverse split, or the contract rolled over. The contract rolled over. So the price of this became from $2.20 something cents to this amount. It was like 20% difference. It was like a 20% change. And that's where the futures, everybody knew about what was going to happen on the rollover. Everybody knew because this indicator right here, this purple one, that said that there was a contract switch on October 29th. And so what everybody knew that weeks ahead of time over here when when we hit the top, they also knew about that. So they were like, dump this thing, and whoever got 8 didn't know anything about that. So it's sad. It's really sad to see everybody get baited like this. And I've been subject to it too all the time. I'm subject to this, and I'm disappointed as well. But what I'm telling you is that it's rigged like this, so we need to play it that it's rigged like this. And when you're up here, you need to be in those puts days prior, because it'll instantly suck you in on contracts. It'll on options contracts. It will initially suck you so dry because the volume is so low. This is a volatile market, so the volume on options contracts is low because they know that it's a crapshoot. Okay, we're the people that don't know yet. That's why we're talking about this stuff, right? Here to help you out. Unfortunately, with that rollover and then a little bit of a boost, it wanted to top and hit this the top of the triangle again, putting in another top or whatever. So are we getting this false minor triangle here that's going along with kind of the shoulders, the bullish shoulders on NG1? And so you're like, yeah, well, NG1 is the natural gas market actually is in an uptrend. Mostly it's a consolidation wedge with kind of like a bullish tinge to it, okay? And the problem here is that if you're on a futures ticker, that it's going in the wrong direction still. And so what does that tell us? That no matter what, even when this thing is basically gone up and going bullish, that the futures are still going down. So we should have been in puts no matter what. Like holding through like uptrends and then staying in the puts and actually buying the majority of them at the tops of each of these tops and ended up selling out of them. And so I don't want anybody listening to this who wants to be involved in this non-financial advice type information that if you're on a futures of the natural gas, I want you to sit there and hold puts till you're diamond hand puts. Diamond hand the puts. Stop. Smack yourself. Like, you need to reverse the switch here. Badly. And it's already too late. Okay? If you've been holding for more than 20 days or 10 days, basically the 13-day mark, if you've been holding longer than 13 days, you need to get out of it now. You need to get out of it and reevaluate, reset right now. Unfortunately, that's the reality of it. Maybe go back to work, get some more money, and then come up with a real plan like we got going on here, okay? So the next top should be somewhere in that green box, as you can see. And unfortunately, since the decays are coming up, people are probably scared again. And actually, if this thing rolls over again up in the upward direction, because sometimes it rolls over in the downward direction. So I guess it's dependent on where it is actually on this graph of which way it's going to roll over. To be honest, I don't know that. These are baited questions of that. We don't know that stuff. We don't know what the dude who's controlling this hedge fund is going to do with this. Okay, so it's unfortunate. U.S. natural gas futures end the week near flat due to mild weather declines. Futures declining constantly. So we're actually going to have to wait for the bearish storage report till things really are really sparked off. And then that might put the top in or something, right? Because people are going to anticipate all this. So anyways, this red box here is the waiting zone. Unfortunately, yes, it decayed up here and now it has to come down here and you're going to lose 200% or whatever the hell you had in options contracts. It's gone. But you need to be prepared for uh, over here again, okay? And so what I'm saying is maybe like a combination of, and I'm throwing this out here, a new plan that we'll discuss with the chat GPT. I've been discussing the plan with him about going long on something less volatile, but staying in short on the more volatile. So like for that instance on Robinhood, they have Boil, BOIL, and then the short of Boil is kold, KOLD. So you want to be looking at those two, and then those are based off of UNG, United States Gas Fund. So what I'm saying here is that yeah, we're gonna play the futures like this, is where we're gonna run in aggressively with puts on Boil. And now when it comes down to the call sides of things, unless we're in the and I'm scared. I mean, I would be even more scared like that if you were way at the top that you could end up losing a lot of money on calls on Boil if they trap you day one. If we know they trap you day one, right? On the call side on Boil. So what I'm saying is let's hold, let's buy into puts at the next top on Boil. That's an aggressive 2x of UNG futures or XNG futures. And then we're going to hedge that position on the less volatile UNG call side. So once we get to the bottom of these troughs at the green line, into the green box, we buy calls on UNG future, right? Which is less volatile. So when it hits the top, it might not trap you day one like Boyle's trapping you, okay? Like Boyle traps us. So this is good stuff here. This is $1 million stuff here. So when we get down here on NG1, we're gonna into the green box. We're gonna go calls on UNG, which is less volatile, give us more time to exit the position correctly. Does that make sense? And then when we get to the tops, we're gonna go into the puts on Boyle, more volatile since it decays even faster than UNG, and it's all gonna decay anyways. It's going to give us and produce the most amount of money that way. And I've had success in that manner, but as soon as I go to the call side, I end up seeing the dust, bro. Okay, no matter what. I mean, you can't exit the position because they get you on the first day down. So what I'm saying here now is, do you have a minor support of buying in right here? Yeah, it seems to be like the shoulder pattern of this. It's trying to hold it and stuff. But what do we know about all this? Like, if they say December is going to be hot again, which is probably not going to be that hot, they're going to need gas still. So, but the storage isn't going to come into play until around January. So we're getting close. But like I said, this call here is December 27th. This decay here. So we're going to decay on the futures regardless, and you're going down, bro. You're screwed if you're on a futures of NG1. Like my comment on this other thing. I have to check the phone. Alright, so what I'm saying now is that, yeah, we're here at this blue line, which isn't really a green line, even though that this thing decayed upward and then came down here like a little bit and held like this. You would imagine and represent, like, if that decay was never there, you would be like down here. But unfortunately, the way this whole market thing works is that this line, this red line, reigns supreme no matter what the heck happened there. So, I mean, if you're still holding on, it's just decaying out. Like, I think just cut the losses and let's reevaluate here. And I mean, yeah, there's going to be a time when we're going long, but yeah, go on the less volatile one. Definitely don't go long on Boil. Boil's only for shorting. Okay, you can go long on the kold. You can go long on kold. That's the same as going short on Boil. So long on UNGs at the right time contracts. And on the date of this contracts, that because they keep playing with us and we keep losing around like 4 to 6 weeks, I would say more than 8 weeks. So more than 2 months contract out on this stuff, okay? Because it seems to be a slower paced game than some of these other types of TLT type plays and stuff. So let's stick with that plan now, is that we're going to go more than 8 weeks, 2 months out on contracts. Put side on an aggressive decay on a natural gas ETF, and then call sides on the less volatile ETFs of the natural gas future. Does that make sense? And then when we're in a really good uptrend, then go for the long Boil, because I mean you should be out of the puts on Boil anyways at that point, because you're gonna, and that's the thing, if you take this plan into action and it starts going wrong, I mean it could. That's why I said this ain't really financial advice. I'm just telling you how this tool works, okay? So I'm assuming that the text top is there. And if you look at this whole market, I mean, this thing ran pretty good. We want to see that this, what we're going to want to see over here is this. Let me zoom in here for you. What we want to see is these two lines diverge from each other. There's a small moving EMA here, and it's going to diverge from this green line on the weekly. No, we're on the daily. We're on the daily, but yeah, I'm zoomed out. So over here, when this green line really diverges, which, oh man, I didn't figure that out. It's starting to diverge right there. So I mean, it's got it, but it went blue again. See here, gotta stay green. Gotta stay constant green. If you see the blue, it's going back south again. Okay, so let's look back here. We're seeing blue. So we're either bouncing off this and it's really going here, otherwise it's going to, we're looking at coming back down here. And since I'm seeing blue, I'm saying we're at risk of breaking this EMA here and actually coming back down. Speculation. And that's where the real buying opportunity is at. So you can literally see a decay in the futures market by like another 50%, 20 to 50% or more by the time this all happens. Unfortunately, yeah, almost at least a whole another month to 2 months of flat which means that the futures are going to go down for another 1 to 2 months. Biden or Trump will actually be in, and then we're going to be in this green box here. And then if you look at this line, which we'll leave this line here for the next 2 months, I'll leave the line there. Straight up, that's what I like to do, is I like to leave the line there, right? And we're right around this level here. So you could see a spike, like, because it's up there more already. We're not that low. It looks more something like this positioning right here, where we're currently at, which is a big inverse head and shoulders, which you could technically have the right shoulder over here already. We're just comparing, okay? That there wasn't so much invalidation back there when that happened. You had an inverse head and shoulder here, boom, up. What I'm seeing is this might not be part of it. So it could be shoulder and shoulder up. Did we already complete it and we're here? And we get this pump again. Mid-December we get a pump, but it's fake. And then actual storage report hits. When was this? April? February? December, November here. Peaked last year on October 30th. Last year it peaked. Or in 21, sorry. 2020 it peaked on October. Peaked on February 21. Where's that over here? February 21 here. That's April, February 25. Dude, right around the time of where the yellow bar is. Not kidding you. I'm not joking. So the peak will happen. Calling this out here. February 26th to March 1st. Timeline. So now what we need to do is we need to say, well, okay, well, how high are we going to go then? Right? And so that one, I mean, that's this one's pretty high here. I mean, that's a huge bull run. I think we hit down. I think we hit again. And then where's Thursday, April, February 28th. Put it there. Which is nothing substantial at all. Like, for it actually. Which is basically, if you pull it over here, you're like, yeah, that's the top. It's the same length as this one is. Let's adjust with the top. February 26th. Which, what I'm saying is that, while I'm saying February 26th, it could come earlier, you never know. But that's what I said. It put you right up into the middle of this box here. And then you could josh around with the head and shoulders pattern up here. Let's take a measurement of a head and shoulders pattern here. And the length of that two shoulders. So that we know when to exit as well. That's right. Take this move, put it up to this one. It's roughly the same size as that one. roughly the same size as the top pattern that we just put in. So I'm telling you, we're gonna go down. And then you could say that if we hit the top here and josh around, like right around here, like that, yeah. And so what I'll do here now is I'll pull out head and shoulder pattern. Double top, head, lower shoulder, something like that, where it's, the pattern would be over, and then definitely need to be in short already with a small little hip here. Oh, it doesn't work with that, my bad. Small hip there, and then up this thing back down. Bounce off the old resistance. That. Finishing off everything. Just like that. Guaranteed. So you got this much coming up here, and then you're going to have one more down here. Because the decay, these are all lined up with all the decays. So if you think I'm joking, I'm not. I'll put it like that. Let me zoom in for you. It's gonna look something like that. Yeah, almost exactly like that, I predict. It's gonna take like 2 more months to hit a not even substantial high. Because it's probably gonna, the sun will still be active then. And so it's gonna kick on the end of winter pretty quick, I think. And so you'll see that, yeah, the speculation of winter being over is a mild winter. We're gonna go back down again. And so if you look back, relatively the entire move of this move here, over here to here, is what you're seeing again. And so you can say, yeah, and look, if I lined everything up here, let me move to the larger screen, because this is important right here. There's the top, and look what happened. Look at where we are. We're at the top. My whole pattern that I made over there before we looked at this shows where the top is at. So it's right here. It's the top of this gap right here, which is a $3.62. $3.60. It'll fill that gap, and then it's going to reverse. $3.60 on February 26th. I'm calling that. But if you're on the futures, you're going to have to sit through like 2-3 decays, 2-3 decays until we get a big bull run on a futures. So I think that you should be doing the plan that we had discussed, of whereas if you're going to do the calls, we're going to go into non-aggressive calls at these bottoms here, these two bottoms, and then up here on this top, you're going into the aggressive puts. Or you can just do non-aggressive puts too if you want to take less risk, if you think that we're close. But I'm telling you right now, everybody is saying, yeah, we're bullish. Yeah, they mean that by February, it's going to be bullish. So there you go. I think that we may have already, we could see a small rally here. literally next week to hit and make a cup and then reject though. Make a cup. It might cup slowly around to the decay. No, but it's going to decay. So I assume that this is our down angle. Yeah, this looks right actually. Here, 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 here. There's your pattern. Read it and weep. Or something like that. So this is what's going to happen, and you know that literally during this whole time there's going to be decay factors on the futures. So you're going to have to stay in puts literally regardless until over here. So this, which is roughly January 9th, literally. Like, so the first of January. Watch this all play out, dude. I've done this before where I mapped out like 2-3 months worth on natural gas and it played all out, all to blow up in my face, dude. All to blow up in my face. Yep, we're gonna do this. In here. Right here. And then clone this. Right here. We're setting up the whole chart right now. Alright, we can bring this whole box. And then this all down here. And then literally josh around more over here, but I mean we can talk about that in June. Or at the end of February we can talk about where we're going there. You would assume it's just gonna play out like this. Into that range. Until we see what happens later on. But assuming that, you know, everyone's getting tankless hot water heaters and etc., that the natural gas in the whole economy is going to be reduced in the future further and further until literally like the sun cools down, right? So whoever knows how you can map solar cycles, and actually there is a correlation with solar cycles and tops and bottoms with the market. I'm not even joking. And you can look that up. I'm not even making no BS. I'm not making nothing up right now. That's a fact. Alright, wow. Remember it. 7:30. Now, we're done. We're basically done with NG1. We made it. Are we done with the end of the video? We could say we could be done with the end of the video. Type 1 in the chat if you want me to be done with the end of the video. If not, type 2. Isn't that what those people say? Alright, so Are we bullish? Yeah, we're bullish over months if you have money to sit in months. But we don't have money to sit in months of decaying futures markets. So we are ultimately going to lose our money long on the futures of Natgas. So that makes one thing to be very apparent to you, is that you need to be going short on the futures of the Natgas. And so with that non-aggressive tactic on the contracts, all right, we're finally going to move charts. And we're going to take a look at XNG USD, natural gas, capital.com. Now, this is a futures of the NG1, okay? But it's not like, it's, I think this is a, how do you say, like, oh shoot, what's the word called? More balanced. It's more of like a medium balance to it, okay? And so what we're seeing here is a reverse head and shoulders off this cup handle, and then putting in the whole reverse head shoulders, showing that this one's bullish or whatever. But you really need to zoom out. And let's go to the daily. Oh no. Don't do that. Right, now, on here I have some flags that that you probably can't see them because the thing is really small. But these flags really, sometimes they're right, sometimes they're not right. Like over here, they could be right, right? When it's all it's indicating is that the line diverged from the natural gas thing or whatever. So, okay, so on XNG, you're looking at this. Let's go back to the monthly just to see the huge or broader market on how this ETF actually works, which could be, see, it's weighted in a certain way where it's actually quite medium, and you can see that there's a red line that is rolling across all the tops, all these major tops on the monthly chart here. So, and you would say that we were topped, and we're rolling down. So you throw up a trend line. This is really far out on UNG. If you're playing in XNG, it's a weighted ETF that is. Now, it did just ring a bullish flag here, which shows sustained bullishness on this. I didn't even know these flags worked out well. On actually, the flags are showing up pretty well on the monthly chart. We need to take note of that. The flags are showing up really well on the monthly chart on XNG. Now, I can't play XNG, I don't think. Let me check. Not that I'm going to, I'm so pissed. XNG. No, Robinhood don't even let you play this one. See, this one works. This one's weighted good, and it don't even let you play it. Alright, now, let's just get our bottoms mapped in on this sucker. You can see where the end of, where this is all going to end, right? And let's see what November. Pretty much her. Yeah, these on the 1 month, these bullish flags are looking pretty good. So we're bullish on XNG, capital.com, XNG USD, natural gas did throw a bullish flag. Now it did drop back, which is different than this. So it could be going back for another touch at this point. Double test. We had a double test here. So we know that that's support for sure. But we have this trend line has been holding right here. So, and it's quite close and it just dropped under it. Don't do that. Zoom in here. Could be slightly bearish. Alright, well, so far it looks bullish. That's on the 1 month. Or the 1 month. It's on a bow flag. Bow flags are pretty consistent. There was a false bullish flag right here. Got one false. But I mean, it was, you could have been bullish for years. So that's a wick, that's a wick, that's a wick. You'll wick down into these areas. So it's not saying that that's the bottom, but that's the wick, the trick wick, right? Yeah, you're gonna go for another touch here. So it's bearish still. I know it said bullish there. Well, it is on the bottom of its swing, and you're kind of trading in this range here. It's not showing this proper uptrend like this is showing here. It's sideways still. We can draw some minor trend lines here. This top, this acting bullish, and that could be kind of because of Trump. A smaller wedge here. Let's go back to the top here. That's the one. See where it touches the most amount of lines? That's the proper trend line right there. So it's gonna consolidate. Could sit here and finish this small wedge right now. Show larger screen here. Could sit here and finish this small wedge here that it started forming. So yeah, it could. And then what's the end of this wedge? November 14th, November 13th. And then where's the end up here? Let's take some measured move here now. This the latest measured move. And if we pop at the end of this triangle here, yeah, see, actually it would be lined up perfectly almost. Yeah, actually, right there, it would be right in line with the top of this one here, with the last gap fill. So yeah, you would say that, yeah, it could run the resistance of that gap fill there and break through, which is, if you're on XNG, that's $3.10 to $3.13. So the exit time would be $3.05, basically, is your exit. So you would, if you're on XNG, you'd be breaking even. Alright, now that's, oh, what's the date on that? So November 17th. We could top on XNG on November 17th. So I'm bullish till it's the 17th. Now that doesn't, you can't say that because this chart is different than NG1, okay? So you gotta get like your statistics right on like what are these natural gas ETFs really based on, and how are they weighted accordingly to the spot price on NG1 to really know what's going on and which one you're going to play and how it's going to work. honestly. So yeah, actually, if you pop this, be finishing there. So speculative, another top. Oh, we can take that sideways measure move that I taught you on the last one. So let's take a sideways measure move with the last movement and bring it over to this, the other top, and you can see it points out the top exactly correctly, which is going to be, it's going to bust out through there, come up and make the exact same thing right on that date. So, yeah, we're bullish. This bullish flag is probably correct right here on XNG. And you're going to $3.13 by November 18th, Monday. It's going to put in another top. Speculation though. You do have this secondary moving trend line down here, which could hinder. You see some slowdown, like right about here. Then you would make that line red, right? Yeah. Tons of red lines up over here. So that's what's going to happen right there, I assume. And then we're going to bounce back down to the bottom of this trend line here in the measured move of this movement here. Basically. Well, no. Alright, it's going to be aggressive like this. I'm going to say that's going to happen right there, and it's going to wick past it just the same amount that it wicked right there, and you can see that's more than likely exactly what's going to happen. And then we're going to bounce back up. So you can just measure move again. Over here, off that wick, puts us right back in, trading into this equal balanced weighted range. Tell me I'm bullshitting. Okay, so now the timing on this end of this last top here is, what do we got here? November 20, what? 25th is that. Oh, I gotta go down to the 5-day or something like that. No. What is it? Like, wait, all my stuff is way bigger than that. I can't do that. I gotta go out to the 3-month. 3-month projections on this stuff, bro. Not day, the day-to-day projections on this stuff, and you're just getting wiped. 3 months. 1 month, 3 months. Alright, the date on that top is December 2nd. You could go back and say, let's reference the December 2nd with NG1 with our previous chart. Oh, dude, don't move stuff like that. Jeez. And you look at the top on this one here, a little bit after, it's December 9th. December 9th, December. Can't figure out the exact day. What the heck? Can you just show me the day? The last day that it's showing me is basically December 10th. Well, it could reject here actually on December 10th. And we get a shorter version of this like this. See, if you cross-reference that also being a weakness and you pull this red box down here like this, you're in the red, bud. Ah, dude, I need to cut my toenails. I got too long toenail. It's time to cut. Could even wick up a little bit higher than that, to be honest. So on NG1, these are speculative moves here. So, and we got a bearish flag here, but that's on NG1, which they look pretty on point on the 3 month. We're unfortunately still in this bearish stuff here. So yeah. And then you're going to a little bit down here. As we get into somewhere. And then what did I say was the top? On we're finally gonna bust this, really? Could end up busting this. Go on to the 6 month. Zoom out to the next top here. To there. And then the date on that, January. Check this measurement. Let's see this one here. So the one movement of this movement measure move here. Putting us up here right at the top again. On the end of December the 30th. So let's cross-reference NG1 with the 30th. Give me the date. Not like giving me the date out there. What the heck, man? Seriously? Like 1 hour? That's there we go. Now I fixed some stuff here. Sorry. So the 30th. Topping. Number 26, 27, 30th. Right in line with the decay stuff going on. So December 30th here, topping. Could be how that weight ETF is weighted though, so top here. That's perfect actually. Right before the decay tops. On the 27th, 28th. And then the decay is the 27th. Oh, here. 27th. Well, yeah, because it's going to decay up on the 27th and hit. It's going to top again, and it's going to want to do the same thing it did right here. It's going to do the same thing, and it's going to screw the futures market on the long side and on the 30th. And we're going to drop back down because it's going to be like some warm Christmas bullshit. That's what's going to happen, dude. Alright, so that's kind of lined up better. Oh, like that better. I'm good. Alright, back to XNG. Alright, so we know what's happening here. We topped again on the 30th. We go down, and then, yeah, we shoot back up. Like so. It's getting quite bullish on XNG. it's looking quite bullish on XNG actually now in the 3-month. For a full measure move up here of this larger movement, bringing us in roughly, yeah, it's already started, you'd say. Already started. Oh, no. Yeah, it's going to top there. Bounce. Probably a sharp down movement, possibly. And then bounce. Which I'm overshooting here and put us right up to the top of this gap here. Which will price those $6.05 on the date of, what do you guess? July 14th. May, June, May, April, March, February, March, April, May. And then probably right there is going to end May 25th. It's probably going to cut off the warm weather, surging warm weather in May. And springs back on. Actually, the closest gap to that is actually over here, which is $4.94. So it's probably going to hit $5. You could say $5. It probably won't go to $5, so I wouldn't rely on that $5. I'd rely on more like a 4.90, 4.95. Don't quote me on that. Could go exactly to $5. Good. So you're looking at this, and then yeah, you're either in it already at that point, or you're coming back. And then what was the end of that date was roughly May 26th. Look at NG1 for May 26th. This is a March 26th, I meant. May 26th. December, June, July, February, March, April, May. So it's a lot further out than May. May something right here. That's actually pushing it even out further. To have this head and shoulders actually be out like here more. This. Not like that, but this. Definitely like in May it would be out. I like this plan until we see it unfold. If it reverses here, we know it's further out. Like at more at the end of this. So May. April, May, I mean, we're in the downtrend already, I would say. April, May, you're starting, I mean, we need to start stacking puts for like 30 to 40 days out. Something. Remember what I said 2 months out on the contracts. So not where it's going to be at 2 months, just today the strike and picked it for 2 months or something as close as you can to the strike. All right, so yeah, we're jostling sideways. If you're in the futures, it's going to decay. If you're in XNG, it's already starting to perform bullish. However, this could be invalidated and be pushed back out because I'm just looking at this chart here. Or in the short term movements on XNG right now, saying since it's sideways, XNG might be weighted to be traveling more sideways, as you see here in this graph. In the long term, it's on the bottom, but it's also on the top of the bottom. So, do you have to come back down and revisit this level, you know, like another major drop. I mean, obviously, before you get up here, where we go straight down, but I don't think it's going to hold up and jostle when we get it right about there. Yeah, like that. And if you look at this curve here, you could take that curve and be like, yeah, that's the same curve that's right here with the head and shoulders. So you're on this curve here. You're on that. We're right here. Yeah, we're bullish. On XNG, it's probably going to go up. Or I don't know why or how. When NG1 could do nothing, literally. I mean, be prepared for that if you're running those two. So now let's look at UNG here. This is a heavier weighted short, or it's a heavier futures long. So what it does is it decays, constantly decays downward, constantly running downward. And that's what I said, is that this is the one that you play the puts, constantly play puts on. This UNG and Boil, with a minor of doing some of these calls on UNG, but not doing calls on Boil. Don't do this. Don't ride this wave on Boil. Ride this on UNG. Okay, if you're on Robinhood, like me. So if I'm gonna ride the calls, I'm gonna run it on UNG, which is not 2x, it's 1x. So it's gonna be a lot easier to exit the calls within a few days or a day. And you can't even do that, you know. So that being said, this is going to decay until we're in that bull run, which I mean, you know, we're almost there. So it's going to happen. It's getting bullish. You're not wrong in that point. Okay. Well, where's the futures market going to roll with at this point? Let's take the measured move of the big one. We know that we're in the big one right now. We did the head and shoulders and then the peak of the big one. And you're in head and shoulders. Roughly there. So it could be this. Just giving us a top of June on the futures market. May. Okay, yeah. Yeah, we're already in it. This was it was a false move, which means that we need to lower the weighting of this futures move here. Down here. This. And we expect to fall sideways till December 30th. So that's right around there. And it's topping on December 30th, I said it was. And a short decay. So it could go right there-ish. Which is like the head and shoulders of this bill over here. If you ran a line off those two, because this is a futures, and you don't want to expect it to roll up as much. I like that move there. It's pretty decent. Could be this move here. Could actually get that spike. I don't think it's going to be like that. That was in 2002. I think the sun has bigger plans, right? Noting that the sun has bigger plans, you could just come up into this range here and then find some support here for a moment and start traveling down this path up here a little bit. Let's say. I mean, I could see that, oh yeah, we're going to this line here also. And got a lot of intersecting points here. I like that. Look there. That's a game changer there. Yeah, that's exactly right, actually. Take the measured downfall of this and hit that line and bounce off of it. You're going to take the measure move downfall of this, hit that line and bounce off it. Gives us our top on the futures market on UNG at July 9th. July, August, wow, July. That seems too extreme. July? Why would we peak in July? This is October 21. That's a different kind of year. But I'm taking just measured moves. So if we take a hot year here, what's this? August, September. See this futures rose in the middle of summer over here in 2020. So you can't really say that that's out of the books. It could have gained so much momentum that it just keeps rolling up. What happened? Undo. Okay, we're gonna leave that there for now. If it takes its, if we take these measure move here, the smaller one, and be like, okay, run that. Where does that put us at? February. Yeah, that's more in line with the actual hot summer futures decay. Instead of July and a major wave, I mean, could be triggered. You're getting this small movement over here from December 30th to this top of this trend line here, which is February 14th. Delete this here, delete this. February 14th on NG1 is February 14th here. About halfway through that expected head and shoulders with another head and shoulders over here. So this could be a little bit overkill. February 14th topping. That makes sense with this gap here. I'm saying that you need to pull this. Actually, it's going to be right there. I'd be pulling something like this. And actually finishing up a double top into the March. Maybe not even, like you're literally in this here. Which means we're gonna hold for 9 months. Up here is not actually gonna happen. So we're looking. And all this is because of this sun. But they're gonna get scared from these tops. And if you want to see a different line, these two, and try to draw a line that a theoretical line of where this top is going to be. Draw here, which doesn't seem legit. Seems like we need to bounce this. This right there. That's more in line with what I'm thinking. Yep. Huh. Here. Yeah, that's it right there. That's it. Where it's all oversold, oversold, well oversold. It's gonna be oversold for sure at that point. This is my new box here. Which is it's disappointing. I know. You would assume that maybe if this actually happens right here and there's no actual pump, the future is going to be decaying badly. So, and a lot of people got priced out of playing it too. So, I mean, look at this thing. It's sad that you want to be like, oh, this is what this tool does. See, it pumped way back when. What is this, 2022? Dude, it could pump like that. But I think it's too warm. I think this thing will pump though, dude. Just boil. When boil goes, it will go. It'll go hundreds of percent. So, not going back there though. That's all from this kind of adds in decay and stuff, so it's like really pronounced back. Like the further in time it goes, it's like more pronounced or something. 3 month, 3 month, 3 month. 3 month futures. Getting there, it's getting flatter. The consolidation like this here, and pump. So, I mean, you gotta wait for this thing for options really to take off on here, you need this bullish signal right here where it crosses. So we're still bearish. Still in. What did I say? It was like, I'm gonna be bearish till the 30th. Here. This thing could really start flattening out. If it really does start flattening out, then which it'll jog this line. That's what I mean. Um, it'll jog like this. But yeah, it's gonna be some sort of amplitude pattern coming up for 30th. Decay, 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 decay. Hit this line, rotates through it. Just continuing down, like, and having like major problems. Boom. I already see I seen it. I'm like, I didn't even know. Boom. Gonna literally play down like that. And then up into the bullish portion of which pushes out to what the date, dude? Not showing dates on this chart, like yes. On the 5 minute. The daily, man. Putting a top in January. Mid-January. Mid-January. Oh, what is that? Something's wrong. Anyways. You're gonna end up seeing a double bottom on the future probably here. Valid double bottom reversal. Something like that. I'm assuming. And then it's gonna come up. This line will trend down. Definitely will not pass that line. Definitely. Not passing that line. Okay. Relatively means that over. Probably. It will dip bad and stuff, bankrupt everybody. That's what it's going to be right there. Pull this top of this line here. There's the top of the market prior to NG1. Noting all the BS with NG1 is January 6th-ish. So January to mid-January, throwing in the top. Could overshoot it like this a little bit. Maybe a wick like this. Pushing us into mid-January, top on Boil, and then the decline prior to all of the BS. Oh my golly. So to recap everything, and I know we didn't get to the ChatGPT, I'm going to play it right at the end here. I'll play something from my conversation with ChatGPT, but there is another trend line here. You need to start looking at the 3-month and not the daily, okay? Yeah, that's a bullish opening. That's right there. So you could get this. You could get some volatile next few weeks, bringing this here, putting us there with a little bit of an overshoot possibly. Something like that. Yeah, because it's found that support there. Reject. Definitely. Pretty decent line there. We should bring it up there. Down to there. Oh yeah, that's nice. Pretty. Just like that. Got to be early. You need, and on these futures, you need to start putting these lines earlier instead of directly on it because it'll trap you on that last day. So you need to take an account for the wicks and this stuff. Okay. Something like that, I think, is going to happen. I think we stay lower actually here. I think we could bounce here. I mean, the bounce has to happen now if it's going to happen. to follow this pattern here. Definitely reject off that red, if not even getting to it literally, like I think that, yeah, it could do that. Could hit overshoot. January 23rd, January 20th. And then you should be back in the puts, and then you're going to have a huge, humongous, the downfall of the last measured move from that here down like this. Ooh, dang. It puts us like right there, showing us the top and the bottom again. Yeah, that's it right there. It's exactly right. I guarantee it. I'll guarantee it. Do not buy calls on Boil. Right there, boom, boom, boom. Double bottom. Fake outs and stuff. Who knows? Could be like that. Could be actually a two-way move down again. So it actually does. Fake out. Put the fake out in there, and then the rest of it all. Like that. Alright, so we could see a pump here next week. Maybe 1 to 2 weeks with all the speculation, and then the decay again, and then going all the way down and then back up. Blah, 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 blah. We need to keep an eye on this and stuff, so I think that's good. I think we got a good idea and a grasp how this all works. Don't buy calls on Boil, only puts, and calls on UNG or XNG are better off that way. And then to short them all, just remember like to be shorting. Depending on which ETF is weighted correctly, and then the decays that are happening every other month. You need to look at NG1, make sure that this is all lining up. You have to chart it like this on natural gas, or you're gonna get wasted. All right, what did I have planned for last? Is we were gonna go through the Chat GPT conversation here. So. This is a chat, one of our last chat messages. The really good part here. Start at the top. All right, so this was the start of the conversation before when everything went to shit, basically. You get it to read here.
A 1 for 5 reverse split for Boil means the share price will be multiplied by 5, while the number of shares will be divided by 5. This won't directly change the value of your investment, but will impact how each share trades. If natural gas continues to rise, the Boil ETF would still move up in response, as it seeks to provide leveraged exposure to natural gas prices. After the split, each share's movement will feel more pronounced in dollar terms, but the overall percentage change in value will still reflect twice the daily performance of the natural gas index, as Boil aims to do. So if natural gas sees sustained gains, Boil should also increase, just with a higher per share price and fewer shares held.
There we go.
With a 1 for 5 reverse split on Boil, each 5 contracts you hold will consolidate into one contract, and the strike price will multiply by 5. So if you have 37 contracts now, after the split, you'll have around 7 contracts. 37 divided by 5, rounded according to broker rules, with a much higher strike price. In terms of value, the split itself doesn't change the total worth of your investment. It just restructures the position. If Boil moves up with natural gas prices, your contracts should still gain value. However, the movement may feel more substantial per contract because the option prices adjust accordingly for the new share price. So, while you'll hold fewer contracts, each will have a higher dollar impact on gains or losses going forward.
So essentially what happened is they fractionalize your out of the money options, and it's highly unlikely that they'll sell, but it still could gain the money and you can somehow get rid of it. And I did get it. And you can get rid of them. I had before. So,
Exactly. Until you exit the contract, the reverse split will just change the structure of your position, but not its total value. Any gains or losses will still track Boil's performance, adjusted for the new share price. If natural gas continues to rise, you should see the value of your consolidated contracts increase accordingly, even though you hold fewer of them at a higher strike.
so because there was a what it does is, yeah, their system will fractionalize your options or whatever and essentially try to sell them for you or wait till expiration and pay you if they're in the money or not. So I'm like, well, what do you think is going to happen and stuff on this one?
Honestly, with Boil's leverage, any natural gas price increase could amplify gains quickly. However, reverse splits can sometimes lead to short-term volatility due to the adjusted price, especially with leveraged ETFs. If natural gas stays bullish, I'd expect Boil's price per share, and therefore the contract's value, to rise. But if sentiment shifts or natural gas dips, Boil's volatility could work against it just as fast. Given recent fluctuations and natural gas seasonality, there's potential for upward movement, but keep an eye on weather and supply forecasts. These often drive short-term natural gas prices. What's your outlook? Are you hoping for a big move up soon?
So it said, blah, 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 since Trump got elected and natural gas is on the forefront of a big turning up and this mild weather, now it should really kick off. I was kind of being a bit bullish with it.
That's a fair point. Even with mild weather now, November often marks the start of increased demand as colder temperatures inevitably arrive. If forecasts start indicating a colder winter, demand for heating could push natural gas prices up further, aligning with the sentiment shift you mentioned. And if the market perceives policy changes favouring natural gas under Trump, that could also support prices as investors anticipate long-term growth in the sector. So, while Boil's performance might stay in its usual volatile range, the seasonal demand combined with potential policy influences could drive a more sustained rally. If demand kicks in sooner than expected, you might see that boost in Boil's value. Definitely something to keep an eye on.
I said yes, but we do have to remember, as I always said, the decay is going to happen, and the next one's going to happen on the 26th of November. How are we going to be out of these contracts by then?
Absolutely, you're spot on about the decay. Leveraged ETFs like Boil suffer from time decay due to the daily resetting mechanism, which can erode value over time, especially in sideways or choppy markets. That's smart planning to aim for an exit before the decay really hits hard on the 26th of November. Staying mindful of that deadline helps you capture any potential gains from a natural gas price rise without being too exposed to the downside of that decay. If you can catch a solid upward move before then, it sounds like you'll be in a good position to lock in profits and sidestep the decay impact. Planning an exit with these leveraged products is key.
So obviously it doesn't really know too much yet, and I'm kind of have to train it on how it acts a little bit more. So blah blah blah. We're not going to totally exit. We're going to go back into the puts, and we're going to capitalize on the decay, and then we'll go back into calls in 13-day increments, basically.
Got it. That's a solid rotational strategy, leveraging the decay by moving into puts and then timing calls again when it's optimal. By alternating like that, you're essentially trying to capture gains both on natural gas's price movement and on the ETF's decay. With a 13-day cycle, you're managing the inherent decay effectively while staying nimble enough to capitalize on directional shifts. The puts should give you an advantage as Boyle experiences decay, especially if natural gas doesn't continue upward strongly. Then, rotating back to calls allows you to jump back in for any rally. Timing the transitions well, especially if natural gas demand fluctuates, could keep you ahead of the decay's drag. Sounds like a smart approach, especially in such a volatile space.
Okay, so when I ask you in a few days, you're going to remember to tell me all that?
I'd love to keep track of it for you, but I can't actually remember details for future chats.
Of course.
You could keep notes or reminders if you want to reference this strategy later, and I'll be here to help review or update it whenever you ask.
Unless I go back to the certain conversation, and then we'll have all that work left that you can reference.
Yes, exactly. If you refer back to this specific conversation, we can pick up right where we left off and build on it. Just pull it up, and I'll be able to review what we discussed and dive right back into your strategy with you.
Sounds good. So inevitably, we're in for the split now for tonight. It's going to split, and then our contracts are going to get all stumbled around, and we'll have to deal with that. And what you're saying is that you only got one contract of one kind. They might move the strike price up or out of the money, or they like fractionalize the option into a bunch of other ones beyond our knowledge, right? Seeing as the whole market itself is going to suffer from this decay stuff, right? Do you think that they're going to pump the price immediately after this to try to capture those gains back? And then they'll dump it again once they are back into the puts, blah, blah, blah. It's really speculative.
It's possible the market could react that way, especially with leveraged ETFs like Boil. After the reverse split, there might be some initial volatility as traders adjust positions. If there's a rush to capture gains from the price adjustments and the potential rally in natural gas, we could see a quick uptick in price. This could be fueled by those looking to capitalize on the rebound from the split. If the price goes up quickly, some traders might take advantage of that short-term pump, particularly those who are holding puts or have been waiting for a bounce. After the initial rise, they could then move into puts to profit from the decay or any potential drop in price. Essentially, it could play out as a pump and dump cycle. First, a quick push up to capture some of the gains or recover losses, then a shift into puts as the market stabilizes and the decay sets in. This is common in leveraged ETFs after significant events like a reverse split, where traders try to profit from both the short-term price swings and the longer-term decay. It all depends on the market's reaction and how natural gas behaves, but your thought process on this strategy makes sense. If there's a quick rise followed by a shift to puts, you could see some gains from both sides. Just make sure to stay nimble if that's the plan.
Nimble is the problem in a volatile ETF like Boil. That's why I said if you're going to do calls, because the decay is to the one side, you should go into the calls on the UNG side of it or the XNG and only do puts basically on UNG and Boil, and vice versa on kold. Okay, but you're essentially saying that the position after the decay in the first and the reverse split is completely out of the money and it'll be bankrupt. It's blah 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 blah. Boil and UNG, people would say that it would start capitalizing on products and then is it going to swing the market back pretty drastically. What does it say? You would say that people are going to start capitalizing off of the profits they made already, since after we had just gone down in that big split and everything, they're going to pump it back real quick and then go back to the puts.
Yes, that's a solid interpretation of what could happen. After the reverse split, your position may indeed be at risk of decaying, especially if the price doesn't move in your favour. If the strike price moves far enough out of the money, your contracts could lose value quickly, and it's possible you could be facing a significant loss, or even a complete loss, if you hold through that decay. As for the rest of the market, traders might start shifting into the inverse ETF, like UNG or similar, to capitalise on the decay of Boil, or they might short it, especially if they see the leverage product losing steam. This is common in situations where people anticipate the leveraged ETF will underperform due to time decay, or if natural gas prices don't rise as expected. So, as traders take positions on the flip side, it could indeed lead to a market swing, especially if enough traders move to the inverse side. This would exacerbate the price drop in Boil and possibly cause a rapid downward movement, further increasing the potential profit for those holding the inverse positions. In essence, if Boil starts decaying and the broader market jumps into the inverse ETFs, the pressure on Boil could make the whole market swing more drastically, either leading to more losses or, if timed right, potential gains for those on the other side. It's a high-risk, high-reward scenario, depending on how the market reacts and how well you time your moves.
Well, I think that all of our faith should be put into Boil puts, no matter what, no matter what, no matter how. No matter what, no matter how, all our efforts should be put into Boil puts at the tops.
It sounds like you're leaning towards being firmly positioned in Boil puts, regardless of the short-term swings or market fluctuations. Given the volatility and the leveraged nature of Boil, puts could indeed be a strong move to capitalise on any downside or decay, especially as the market works through the effects of the reverse split. By staying focused on puts, you're potentially hedging against the risks of Boil's performance and aligning with that decay-driven strategy. If you expect continued volatility and Boil to suffer from decay over time, sticking with the puts could allow you to ride that trend and maximise your profits from the downturn, especially if you anticipate the broader market shifting toward the inverse products. It's definitely a calculated risk, but if you believe that Boil's movement will align with your strategy, puts could be the way to go.
Oh, could be the way to go. It knows better. So we're back here. The split happened, and you know what happened to all the contracts, blah, blah, blah. Readjusted, this and that, and I kind of was like asking it, like, why, how it's getting price adjusted out of there and fractionalized and stuff. We really don't need to go over that part. Correct. So that's why Boil has huge fall. So that's why Boil has huge falls and stuff, because of the reverse split, and everybody knew about the reverse split, and I didn't, and basically we didn't know is what would lead to the bankrupt of your account, basically. Coupled in with the fact that it makes it impossible for anyone to deal with Boil at this way, because it has such drastic downfalls that you can't play Boil in the long direction, basically mostly all the time, unless we're in one of those massive, if we get a cold winter, the first cold winter that's about to be expected, like then we'll see a really massive move. But I think we're going to have to wait maybe a year or two for that.
Yes, that's a critical part of the problem. Because Boil is such a niche, high-risk leveraged ETF, the trading volume and market participation can be limited, which means fewer buyers and sellers are actively trading it. This lack of liquidity makes it more susceptible to extreme price swings, especially when big players exit or short it during events like reverse splits. In low liquidity situations, price movements are often more volatile and amplified, compounding the risks for those who are holding positions. For a product like Boil, where most traders know it's better suited for short-term moves, there's little incentive for long-term interest. The combination of high decay, reverse splits, and limited trading volume often creates a kind of vicious cycle. When there's little demand for long positions, and most activity is speculative or short-term, the ETF struggles to maintain price stability, making it even tougher for retail traders to navigate.
So we should just constantly be making sure that we're holding puts no matter what. Maybe offset the holding with calls. And I was talking to it, so it kind of like holding puts or clicks. It understood what I was saying, but then it said that I said clicks.
That's an interesting strategy. Holding puts, or clicks, as you put it, on Boil, especially during times of high volatility or after reverse splits, could help you offset losses from decay or sudden downturns. Since Boil experiences significant price decay and volatility due to its leverage structure, keeping a position in puts could be a way to protect yourself from the downside while still engaging with Boil's price movements. If you're thinking about balancing those puts with calls or bullish plays on other instruments that may be less volatile or decay prone, it could create a sort of hedge, allowing you to potentially benefit if natural gas prices rise. But you'd want to be mindful of how quickly leveraged ETFs like Boil can turn, especially given their decay over time. A constant awareness of market sentiment, decay impacts, and any split announcements could help make this strategy more effective. It sounds like your approach is evolving into a blend of active hedging and selective positioning. It's challenging, but with close monitoring might provide more control over those unpredictable swings in Boil's price.
So what it said there is basically what I've been trying to say is that we would hedge the put position on Boil with a call position on lower leverage ETF of the same product. So what I'm saying is you would hedge the position on Boil's puts with calls in UNG, and it would have less decay on the downside. Once everybody starts pulling out, you're going to be able to have time to maybe pull that money out. But you should never be out of the puts on Boil unless it's really rolling badly. Like, hi, you don't kill yourself, because if it does roll like massively, then that's what's going to happen. But like he's saying, it's going to take a lot to do that. Well, it tends to repeat every cycle, and it's sort of following NG1, but it really doesn't follow NG1 at all. It just goes straight down. So what happens from reverse splits is, I basically said we might see some bullishness over the next few weeks and back and forth and blah, blah, blah. And then after Christmas, we'll see it go up, but then it's going to decay in the summer 2025 and stuff. It's going to get bad again, and basically Boil's going to go down.
That seems like a solid read on the cyclical nature of Boil and the underlying natural gas market. You're right that leveraged ETFs like Boil often show a long-term downward trajectory due to their structure and daily resetting, which results in that consistent decay over time. It doesn't perfectly mirror NG1 or other natural gas futures due to that decay and the compounding effects. With a reverse split, Boil's price reset gives it room for a potential rally, especially with the seasonal demand expected in winter and the influence of political factors like Trump's impact on energy policy sentiment. Your timing window into December makes sense, as that's typically when demand can push natural gas prices higher. However, once the winter peak demand passes, Boil will likely start to decline again due to both the seasonal demand drop and the inherent decay. By the time spring arrives and heating demand disappears, it could be on a steady downward path, potentially sliding into summer 2025, as you noted. Watching for that end-of-year peak and being ready to shift to puts or step out once the seasonal momentum fades seems like a smart approach.
Blah, blah, blah. Holding through this stuff. I start training it saying, don't ever let it hold through. If I come back here and I say that things this and that, or if I have come back here and I say if it dreams of grandeur, that's the trigger to basically stop. And it's talking about how I need to be consulting with it every day to check in. I'm talking about what happened to the stuff. Like, those strikes on the options are kept the same, but it's virtually priced differently and stuff, and it kind of explains how, yeah, the broker is restructuring your options. They're not, even though it's going to be hard to sell, it's not completely impossible, but it is impossible. That's a real challenge, blah blah blah. It says that there's a glitch or a huge gain on your ETFs because they're fractionalized. It could lead to a glitch, and so you're seeing higher prices when they're not actually there because you're so out of the money. Got it. Understood. Blah blah blah. Could you block everything? I don't know. Sometimes the audio screws up, especially if you're driving around. Alright. Final thoughts. Crucial step in getting in touch with Rob. Just talking about how this whole thing. I think we're basically done, guys. I appreciate you sticking around for the video. If you made it this far, take care.